How's everyone going? Today is August 4th, 2023, and I missed last week. Hope everyone had a great weekend nonetheless. I know you missed me. Yeah, this week we've got a lot of stories from the world of finance, from the world of Bitcoin, from across the continent, unless you do live in Africa. Talking all about US yields, Bill Ackman, famous investor Bill Ackman's short on long-term treasuries, all the big Bitcoin news that was somehow missed by the mainstream media this week, and this coup in Niger that is going on right now that might have major implications for the price of gas and oil, or natural gas and oil in Europe this week. That is getting some coverage, but we'll do a bit of a deep dive into it so you kind of know what's going on. And yeah, as always, interested to hear your comments in the chat, and I'll bring them up during the stream. I always want to have a bit of a dialogue going with you guys now with this new format. So yeah, if at any moment you want to chime in on a story or you think maybe I missed something, feel free to comment and we'll talk about it live. Before we get going, I want to make a quick shout out to our wonderful sponsor, Beaver Bitcoin. And before I do that, I just want to say a big thanks to sponsors, to anybody who has donated to my channel in the past. As you might know, I am doing, some of this Bitcoin news, finance news stuff a little bit more full time now. And because of that, I don't really, do a lot of other income sources full time. I don't really work other jobs besides making videos for this channel, whether they're shorts, whether they're live streams, whether they're these like mid-length documentaries. And so every time that you guys contribute, even 1 or 10 sats via Nostr or Twitter or any of the sponsors that make my show happen, I really, really appreciate it. It keeps me going, it keeps me motivated, and it allows me to connect with this big community out there that is interested in the world of finance and where money's going. So big shout out to Beaver Bitcoin. They've been here now, probably my longest sponsor on the stream. They are the easiest and fastest way to buy Bitcoin in Canada. Go check them out. I think they're a perfect service for if you're looking to get a friend or a family member who hasn't quite been orange pilled yet into Bitcoin without all the hassle of dealing with an exchange. This week's show is brought to you by Beaver Bitcoin. Dollar cost averaging is the most stress-free method to enter the Bitcoin space. And if you're looking for a simplified way of buying Bitcoin in Canada without needing to rely on a custodial exchange, Beaver Bitcoin is your best bet. Beaver Bitcoin lets you set up recurring Bitcoin purchases directly from your Canadian bank account and straight into a Bitcoin address that you control. It's like a savings account in a currency that you actually want, or a Netflix subscription that doesn't suck. And if you don't want to wait to stack sats, Beaver Bitcoin supports instant non-custodial Bitcoin buying via e-transfer as well. Give it a shot today at beaverbitcoin.com. Alrighty, so first things first, we're going to take a little bit of a look at the general stock market, things like the Volatility Index. I like to take a look at these every week just because it gives me a general pulse on maybe where we're heading seasonally with all markets. Because while this show is kind of Bitcoin leaning, I think Bitcoin does have a correlation often with what is going on in the macro picture. All right, so let's pull this up here real quick. So this is the VIX chart, and you might notice this line. I've had these two lines here that kind of go back from the beginning of the pandemic, and these kind of represent the ranges that the Volatility Index was playing in for about 2 years until about May, June of this year, where it firmly broke under it, kind of signifying the grind up that we've had and the lack of volatility overall in the indexes. So between the banking activity and the rates going up and all that stuff, we kind of bounced around. And then this summer, as markets and a lot of particular individual stocks hit new all-time highs, the Volatility Index has kind of just taken a back seat and has not been too crazy or volatile until this week, a little bit, where we have seen a big spike in the VIX for a few things. Number one, I believe it was, I don't remember if it was this week or last week, the Federal Reserve raised the Fed funds rate to about 5.25 or 5.5% now. And we started seeing a big uptick this week in bond yields. So actually, except for today, where the bond yields are down, the 10-year bond yield is finally testing, the highs of October, where, what was that? I always got noise in the background here. I live in one of these stratas, and it seems like every week they do like a fire alarm test. We had a real one like a week ago, and we've just had so many tests that when a real one goes off, you kind of ignore it. and then it just sticks for a while, and you're like, oh shit, maybe I gotta like leave my building. And then you realize you live on like the 20th, 30th floor, and going down those flight of stairs is not fun, but definitely way better than going up them. That would be even worse, I guess. That aside, the U.S. 10-year bond yields have spiked up. They hit about 4.2%, which is almost as high as they were kind of in the middle of the gilt crisis back in October of last year. And, you know, generally when bond yields go up, it signifies that, you know, people are selling off this asset, but it also becomes attractive to some people because you have a quicker or an easier risk-free return yield, which we've kind of gone over in this show. And so as we saw bond yields kind of spike up this week, we saw a bit of a downturn in stocks, not to mention that a couple of big companies, which we'll get into, like Apple and Amazon, reported earnings. Some were good, some were not so good. But yeah, a bit of a change in the pattern of volatility as of late. So yeah, there you go. Got a quick little spike in the VIX here to 17. I still think a VIX under 18 or even 20 doesn't really, you know, show cause for concern. But what I am, you know, thinking about more and more is that I think we're emerging out of this summer lull with markets, and we're going into probably a bit more of a turbulent fall. If you're a long-term holder of assets, it doesn't matter. But when I look at opportunities, I look at the triple Q chart here, and I see that this thing is kind of rolling over a little bit for the first time in what appears to be months of just kind of stair-stepping and grinding upwards. So something to take a look at. Am I super bearish? No, but I think it's a pattern break from a relatively grind up easy time for passive investors. Speaking of which, somebody sees something different on the horizon. That is Bill Ackman. So you might know Bill Ackman from his infamous shorts of Herbalife, and then his infamous longs of Valiant Pharmaceuticals, which was a big scam. Now he's also, you know, 2020, he was on the airwaves saying that COVID is the collapse of free markets. Not sure if it's me, but the video and the audio are out of sync. Hopefully not too bad. It's hard for me to tell on this thing. Yeah, I've been dealing with this like all week, trying to fix it. Bear with it. I'll put my little icon small here so you can still see what I'm covering. Bill Ackman, so infamous for crying wolf, infamous for a bad long and a bad short, but still a pretty successful investor overall, has a take now on long-term bonds. So if you don't know the difference between short-term bonds and long-term bonds, essentially when the government issues debt, they issue certain notes, depending on, you know, what the demand is for the market. So you could buy a bond that kind of, you know, expires in 1 year, you get your yield. By the end of the 1 year term, you get your, you know, your initial deposit back. And then by the time you, you know, get into the later bond yields, you're dealing with products like the 10-year yield, which is sort of a gold standard for portfolios. It's seen as almost like holding cash, because at the end of the 10 years, you get your full cash back plus whatever the interest rate is on the bond. And so what you're seeing lately is a lot of companies, instead of holding cash in a pretty inflationary environment, they're stacking up bonds in their portfolios. They're buying, you know, 1 to 2 year bonds, especially because that way their cash isn't locked up for 10 years, or they're not at risk of the price of the bond kind of fluctuating in the short term within a year or a couple months. You know, these short-term T-bills will give everyone their liquidity back. So they're very low risk. And we know that during the banking crisis, the big problem was that all these massive banks were loading up on the 10 and the 30-year bonds when rates were at basically zero. And I heard a really good excerpt from Greg Foss. If you want to kind of understand the volatility in the bond rate, basically, Austria issued a 100-year bond back early, I think before the pandemic. And that bond was $100. And then when the pandemic hit and the interest rates went down to basically zero, that bond actually got repriced to about $130 because it had a positive yield on it. That bond today is now trading at $30, which means if you bought a 100-year bond right after the pandemic, you are down possibly over 100%, which is kind of unbelievable. But Bill Ackman is kind of seeing this and saying, well, you know, I think that these bond yields might be priced a little bit too low. So the 10 and the 30 year right now are at lower interest rates than the short-term bonds, which essentially is a reflection of the market saying, we don't think inflation is going to be that persistent We don't think the risk of holding a U.S. Treasury is that high in the long term. So, we're going to buy these things up, and therefore the yields and the yield that you get on those long-term bonds is much lower than the short-term yields, which are more in line with today's Fed funds rate. So what Bill Ackman is kind of sniffing out here, and I'll kind of read a bit of what he's been talking about, is that he thinks that the bond market's getting it wrong, and he thinks that inflation might be here to stay, and that we have to reprice U.S. Sovereign debt, especially in the light of them getting a downgrade now. Their credit score, the U.S. as a country, their credit score just got downgraded to AA plus instead of AAA by one organization, whether you think that matters or not. But anyways, this is what Bill Ackman has to say, and I'm curious any investors here if they agree with this or not. So I have been surprised how long U.S. long-term rates have remained in light of structural changes that are likely to lead to higher levels of long-term inflation, including deglobalization, higher defense costs, the energy transition, growing entitlements, and the greater bargaining power of workers. As a result, I would be very surprised if we don't find ourselves in a world with persistent relatively 3% inflation. From a supply-demand perspective, long-term treasuries also look overbought. With $32 trillion of U.S. debt and large deficits as far as the eye can see, and higher refinancing rate, and an increasing supply of treasuries is assured. When you couple new issuance with QT, it is hard to imagine how the market absorbs such a large increase in supply without materially higher rates. I've also been puzzled as to why the U.S. Treasury hasn't been financing our government in the longer part of the curve in light of the materially lower long-term rates. This does not look like prudent short-term management, in my opinion. And yeah, I would agree with that too. I mean, if they think that rates are going to be, lower in the future, why are they funding so much of the debt with higher rates? They could be saving some money in that regard by taking advantage of the market, which is willing to pay a higher price for these long-term bonds. So then consider China's desire to decouple financially from the U.S., yield curve control ending in Japan, increasing the relative appeal of yen bonds versus U.S. treasuries for the largest foreign owner of treasuries, and growing concerns about U.S. governance, fiscal responsibility, political divisiveness, recently referenced in Fitch's downgrade. So if long-term inflation is 3% instead of 2% in history holds, then we could see 30-year T yields at 3% plus 0.5% plus 2%, or 5.5%, and it can happen soon. There are many times in history where the bond market reprices the long end of the curve in a matter of weeks, and this seems like one of those times. That's why we are short in size the 30-year T-bill, first as a hedge on the impact of higher long-term rates on stocks, and second because we believe it is a high probability standalone bet. There are few macro investments that still offer reasonably probable asymmetric payoffs, and this is one of them. The best hedges are the ones that you could invest in anyway, even if you didn't need the hedge. This fits the bill, and I think we need the hedge. So in layman's terms, because I've been mumbling for a while, Bill Ackman's tweets, essentially what Bill Ackman sees is higher persistent inflation for longer. And when the U.S. issues debt, they have to pay a yield to the people who are lending them money. And if that yield is too low, they're not going to get the money. So what he's essentially betting on is that bond yields are going to have to rise to compensate these people willing to basically loan the U.S. government money for longer periods of time. So I would say that's a pretty fair bet. I would, I don't really mess around with bonds because they're not something that, you can. I don't think you can do this from like a web trading service. You have to make phone calls and literally call your broker to buy a bond. You can mess around with like bond ETFs, but that's not that fun. But yeah, essentially he thinks that bonds long-term are overpriced and yield should rise because we know those things work inverse. So the price of bond goes down if the yield goes up. If the yield goes down, the price of the bond goes up. And yeah, he thinks bonds are overpriced. And I might agree with that. Another thing, and at first this was sort of related, but then I realized it was unrelated. The first bank to fail since the whole First Republic thing just happened 2 days ago, called Heartland TriState Bank. And so Heartland TriState Bank, not a public company, only really holding $139 million of assets. I thought it was a deal of, same thing with First Republic. They're holding too many, long-term treasuries that lost value. Turns out they were part of a scam and had nothing to do with the Fed or balance sheet asset quality. They were just part of a scam, and they, had a hole in their balance sheet because of that. So that foreclosed. But it's a good reminder that as we enter earning seasons for a lot of banks, these small regional banks, that we're going to see how strong their balance sheets are. And with the interest rates ticking up, especially coming into the end of Q2 and going into Q3, I think you're going to see some major losses again in banks. And again, that is what spurred the bank run of Silicon Valley Bank back in Q1. And I would be really remiss to forget that that was the catalyst. It wasn't just some random, thing that happened within the bank. When the public was, basically amiss, or the public witnessed essentially the size of the hole in their balance sheet because of a mandatory earnings report that had to come out, that's when that stock collapsed. And that's when they had essentially the run. So even though that balance sheet hole had been there probably for weeks and months, the market hadn't completely sniffed it out yet until the earnings report came out and really illustrated how large of a problem it was. So yeah, keep your eyes on this stuff as yields go up. Remember, a lot of these banks are holding 10-year treasuries, 30-year treasuries. And we'll get to this a little bit later. But in Canada, as we have similar interest rate correlation to the US, refinancings are coming up on real estate. And I think that poses a massive problem, maybe less so to the banks where some of the losses can be easily socialized, but more so problems to the individuals, which are refinancing for some incredibly much higher mortgage rates. All right. What do we got? Next story here. Microstrategy. Let's talk about Microstrategy here for a second. So I have owned a bit of Microstrategy stock in my long-term portfolio. I like that they are going all in on Bitcoin. It's like a leveraged Bitcoin play. It's almost like buying an ETF, but they are kind of changing their fundamental business from data analytics to creating more products around Lightning. And it was one of the reasons that early on I was really interested in buying Square stock. I love the idea of businesses building applications on Bitcoin. I think that's the biggest hurdle to adoption, is good user interfaces and making the onboarding process seamless. And so MicroStrategy is now pivoting their business towards that. But it turns out they purchased like another $50 million of Bitcoin last quarter, and they announced during their earnings call this week that they plan to issue $750 million worth of stock to fund more Bitcoin purchases. And so this is kind of an interesting development for me, because if you look at how MicroStrategy started out, they had all this excess, cash reserve from their underlying business. And they said, well, we got to buy an asset with this. Let's do Bitcoin. And then they saw how popular that was with their current shareholders, that they said, well, we'll do some tender offers and see who's down for that. Then they took out some, long-term bonds when the interest rates were basically zero. And they bought more Bitcoin with that. And now they're full out coming out and saying, yeah, we're even going to create dilution and issue new stock, and we'll buy Bitcoin with it. And just to give you a bit of a glimpse, this is $750 million of stock that they are basically creating out of thin air, selling to the open market to buy more Bitcoin with. The company itself, I believe, when they started their whole Bitcoin thing, was not even valued at $750 million. The company itself wasn't, and now they're just basically issuing that much in stock at the much higher, newer price. But let's take a look here at the MicroStrategy chart. So if I was I think they're like a $3 or $4 billion company, and I came out and I said I'm going to do $750 billion of million of dilution, I would get a pretty sizable drop. And you can see, this week after their earnings call, they did drop about 20%, which would basically reflect the amount of dilution that's going to happen to the stock. But on the same time, they're creating these new shares. They're essentially pouring all of that into a leveraged Bitcoin play. So what I think Saylor is essentially doing is kind of the antithesis of what the original pitch was for MicroStrategy. I think the original pitch of MicroStrategy, or at least his pitch for the last year, was, you could buy our company. We have these underlying cash flows for our business, but we also own an unwieldy amount of Bitcoin. You basically have a floor. If the price of Bitcoin crashes, we owe some people, but we can pay them off over time. And we still have a business at the end of the day. So it was like a play on Bitcoin that couldn't maybe go to zero because of that. Well, that whole dynamic has changed now. Essentially, he is adding more volatility, I think, to his stock, because essentially as Bitcoin price goes up, he is long leverage Bitcoin. And so MicroStrategy should outperform Bitcoin in the long term because he owns so much of it. I think it's almost 1% of the supply that he owns now. But if, the price of Bitcoin middles around, does nothing, his bonds come due for whatever reason, it's going to be painful for shareholders who have not only been diluted, who not only owe debt, but have a underlying business that in its root is not actually growing by that much. So they'll just own a lot of Bitcoin. And I don't know. I find that kind of interesting. I'm curious your perspectives on it. I think initially Michael Saylor had this great pitch to other businesses, like, add Bitcoin to the balance sheet. But he has gone so, I don't want to say far off the deep end, but he's gone pretty deep into the deep end with Bitcoin. And I would say that fundamentally, Microstrategy is not the same Bitcoin play as it was maybe about a year ago, where it was, here's a company with Bitcoin on the balance sheet. It's now a full-on speculative play on Bitcoin. It's almost like a leveraged Bitcoin ETF, where if the price of Bitcoin collapses to, let's just say even 4 digits, it would be pretty bad for the market overall. Pretty bad for MicroStrategy stock overall. But yeah, curious what you guys think. I like it because it is basically a Bitcoin ETF, and you can add that in your tax-free savings accounts or your retirement accounts and still have your Bitcoin exposure. All right. Let's jump into some quickie news here, and then we'll dive into kind of a bigger story that hopefully you'll hear more about on the news. Hopefully won't be buried, because I think it's pretty important, even though it's pretty far away from most of us. Quickie news, Bitcoin miners apparently now by April 2024 are going to need the price to be 98K by the halving. So essentially, because the issuance of Bitcoin is getting cut in half, miners are going to need to have a higher priced Bitcoin in order to break even on their energy and infrastructure expenses. So typically running into halvings, Bitcoin price has risen a little bit, but the bigger gains on Bitcoin prices are generally about 6 months after halvings. But yeah, it's been kind of interesting to watch that the mining stocks, again, have heavily outperformed the price of Bitcoin over the last few weeks and months. Specifically here, this is a great chart that shows, Iris Energy, Riot, Bitcoin has been flat for about a 2-month period, and these mining stocks are up anywhere between 50 to 90%. I'm of the opinion that they're way ahead of themselves. I think the Bitcoin price needs to catch up. Unless the mining stock price is an indication of smart market makers knowing that the Bitcoin price is going to exceed and they're trying to front run it, I would say that they're way overvalued. So I think, if I was to make a trade call, I would say long Bitcoin, short the miners right now, even though the miners have a lot more volatility to deal with. You'd have to figure out the ratio on that, but I think the miners are way ahead of themselves. I think I talked about this with Bennett on last show, that I thought that. But yeah, they're going to need a much higher Bitcoin price in order to justify their valuations, because they're going to be mining at a loss in the next 8 to 10 months because of the halving. So yeah. On the ETF front, James Seifert here, who has done a lot of analysis on ETFs in general, has raised his conviction of a Bitcoin spot ETF approval from 50% a couple of weeks ago to now 65%. And kind of his reasoning behind this is that the Grayscale Bitcoin Trust lawsuit, where the SEC has kind of barred Grayscale from converting into an ETF, the decision on that is very soon. And based on what happened with the Ripple case, it looks like they're going to have a very hard time making the case that Grayscale shouldn't be able to convert because of so-called not having surveillance, protocols in place from Coinbase. So this has been the only real thing that has been preventing a Bitcoin ETF, is this surveillance sharing agreement, which we've talked about before, which is essentially that Coinbase is not a registered broker like the NASDAQ or the NYSE. They have not, shared all their data with the government on all the traders and trading rules that take place on their platform. But I don't know how much longer that holds up in court, because in previous ETF approvals for commodities, there have not been surveillance sharing agreements. It is not required by law to have it. The SEC will just say that they want it and bar your ETF for not having it. All right, next one. Apple earnings. There were a lot of earnings this week, but I like to look at Apple because that is the biggest company in the world by market cap, and kind of go over, they were one of the weaker stocks this week. They fell quite a bit from somewhat underwhelming earnings. And sort of the TLDR there is that the iPhone sales are down maybe about 2% year over year. But there are some major slowdowns in the tablet and Mac market where they're down almost double digits from last year. So Macs and tablets not selling nearly as well. And then the other big thing too is that there is this ongoing lawsuit from, I think, app developers fighting a court ruling that would essentially allow app developers to pursue different methods of payment within their apps. And this is a really big deal because if, Apple cannot force in-app purchases through the App Store and other app developers are allowed to just charge direct to credit cards and things like that, or crypto, then Apple could lose potentially a good chunk of a quarter of their revenue, which comes from App Store sales and in-app purchases. And then they have this $3,500 headset that they announced, the Vision Pro. We'll see what that does. It seems to be more for hardcore users. But yeah, Apple has a really big weighting on the entire stock market. Yeah, they're kind of saying, things are a little bit tougher than we expected this year. So yeah. And then this is a short but kind of like interesting story. Again, like a perspective on Canada here. So this Barrie area woman in Ontario, she had her mortgage payment. She moved in her place about 2 years ago. And she got this mortgage and it was a variable rate, which in hindsight is crazy to get when the rates are like zero. You might as well just lock that in, unless you think they're going to go negative for whatever reason. She locked in a $2,850 a month mortgage payment, and that has now had to be refinanced. And she's going from $2,850 to $6,200 and is essentially forced to sell her home because of that. And one of the things that I thought was really interesting here is that she has been saying, like, there are reports of people in my community, families making over $100,000 going to food banks, which is just incredible to me. That is the state of where we are at in Canada, is families making $100K in income are having to go to social services and food banks because of the cost of their mortgages, right? So I don't know. It's like, we look for people to blame in these situations. I would say that, it's hard to pick one person, but essentially the Federal Reserve and the central banks, by making these decisions on rates and by being behind the curve on inflation, by keeping rates as low as they did for so long, it forces everyone in the economy that has any sort of loan or any plan to get a loan, which is essentially everyone in the Western world, especially if you want to buy a house, it forces everyone to be so much more cognizant of the macro picture. I think, a year ago, I think it was becoming pretty obvious that the Federal Reserve would raise rates to about 5 or 6%, because traditionally every single time they've had a rate hiking cycle, they have gone over the current inflation amount. And so as inflation ticked down, I think it's like history just shows you that eventually the interest rates go above what the inflation rate is, and then you get a so-called recession. But for Canadians, especially, which don't really buy these 30-year fixed mortgages, to not be adept to this stuff is a failure of our education system. It's a failure of the banks to really, convey the risk of home ownership with mortgages to prospective buyers. And it's a failure, no offense to individuals, not really looking up this stuff before they get into mortgages as well. And I hate to say this because I am here to try and teach people about this stuff, but it's like one of the reasons that I don't even like the concept of mortgages. I mean, I can't snap my fingers and make housing prices cheaper, but you start going outside Canada and the US and Europe, and you find that people don't buy homes until they can fully afford them. And a lot of places they still can't. But in those countries specifically where mortgages are not a thing, there's also a correlation of much less housing speculation. So if you can't get leverage to buy a place, turns out maybe that place might not be the most desirable place, but even if it is a desirable place, you're not going to be finding people, jacking up home prices or having these incredible 20% per year returns that so many of us in the West have gotten used to with real estate, that we will do stupid things like buy variable rate mortgages, thinking that, the home equity will appreciate so much more than, whatever my mortgage will change to. It won't matter. I can just borrow against the home. So yeah, pretty bad in Canada. At the same time, you get this weird effect because we have so much immigration here that inventory levels are kind of stuck. People are clinging onto their homes, but the buyers are steadily trickling in from other countries as immigration becomes easier and easier, and the numbers go up here for that. So yeah, tough situation in Canada, but not as tough as Niger, which we're going to talk about next. So Um, Niger is a country in Africa. They're kind of like a bit West Africa. And so they had a coup kind of take place recently. And it's part of a string of coups that have happened in neighboring countries in West Africa, Burkina Faso, Mali. Um, and it presents a really interesting challenge, which we'll get to for these countries themselves, but also Europe, which is dependent on them for a lot of resources. So, kind of a bit of a backdrop here. On July 30th, here the article opens. The Economic Community of West African States (ECOWAS) demanded the immediate release and reinstatement of Niger's elected president, Mohamed Bazoum. He had been held by the military since the 19th of July. The regional bloc gave the military in Niger a one-week ultimatum to comply and warned it would take all measures necessary, including force, to restore constitutional order. So the military performed a coup. They went in, they stormed the offices, and they've now held the elected president, Mohamed Bazoum, essentially hostage. On the 28th of July, a couple days ago, the head of the presidential guard, or the military there, General Tachani, declared himself the head of state and seized military power. So there have been this history of coup attempts in Niger. This is not the first. There have been a few failed ones, but the question is why? Like, why has this been happening, essentially? So looking at the background of Niger as a country, there has been a lot of insecurity within the country due to gangs, due to things like Al-Qaeda, Boko Haram. The youth are being sucked up. They feel a sense of helplessness because of the economic, growth not really being there, and a lot of exploitation in things like the oil industry there and things like the mining industry there. So when you have a backdrop like that where people feel insecure economically and physically, they tend to join gangs and not really be happy with the state of things. And Niger, like many other countries in West Africa, have kind of been under the linchpin of colonialism, particularly from France over the last 100, 200 years. And while they did democratically elect this president that is now being, held by this coup, there's still a lot of people that are not really too happy with the state of things. This exploitation that has been under colonialism there has continued, regardless of them having a functional, thriving democracy, that key buzzword that all of the U.S. channels like to throw around as the one thing we have to salvage. Lesson there: you can have democracy and still have deeply unhappy populace. Democracy is not a be-all, end-all for rooting out corruption. Definitely not at all, actually. So the reason that this is sort of important is that there are a bunch of neighboring countries, as I mentioned, Mali and Burkina Faso, that also had coups and have been growing pretty distant from Western allies and influence. And some of the protests actually that have occurred in Niger have actually seen kind of citizens there waving Russian flags and chanting Wagner, which you might have heard a couple of weeks ago. There was an attempted coup of Russia by this private military force, but this private military force also operates in different countries as well. So this suggests what it says here, that some people in Niger believe that the military, supported by Russia and the private military contract group Wagner, would do a better job of fighting insurgents. So between, Al-Qaeda and Boko Haram, there's been a lot of warfare across these countries, kind of private gangs and things like that fighting. And the democracy and the government there have not done a great job at protecting the populace and also protecting them from joining these things. So there is kind of a flight to, I guess, more private military groups in this. And what makes this especially interesting is that there were a lot of plans to build a pipeline through Niger, coming from Nigeria all the way up to Morocco, that would feed Europe with natural gas. And you might remember when the war in Ukraine started and you had the Nord Stream pipeline shut down, the price of natural gas and heating in Europe skyrocketed. It's kind of leveled off a little bit, and that's because the United States has been sending over a lot of liquid natural gas by freighter boat, but they don't have a land transfer. They don't really have many native pipelines going into Europe to provide natural gas for heating, oil for cars, things like that. And so there was this big plan to build this gas pipeline going from kind of the lower South Niger all the way up through Morocco. But now with what's going on with Niger, it looks like that is totally under threat. And the reason that that is a big threat also to America is because guess who's building this pipeline? Guess who has the contract to build this, multi-100-kilometer long pipeline that goes all through West Africa? Chevron. The United States is a big part of it as well. They have military bases in all of these countries that work with Chevron to make sure this thing gets built. And now with this military coup, it looks like it's potentially not happening. So if the pipeline goes under, the US and Chevron will lose around $25 billion of investment. And so that's why you're getting people like Vice President Kamala Harris condemning the takeover. Obviously they have to stand up, but realize that they have skin in the game for this conflict. And, I think for them, whatever you hear out of the West, it's a lot less about them wanting to protect democracy and to protect people's lives, and a lot more of them wanting to protect their investment. They really don't have, America shouldn't have military bases there. They shouldn't have all the skin in the game. On the other side of the world, they shouldn't be policing the world, in my opinion, and the opinion of many other people. But yeah, it's going to be interesting to see where this goes. I've been kind of tracking this as kind of one of my international watch stories. We'll talk about it moving into the future. I didn't bring this one up, but a couple of weeks ago too, when we talked, more international stories, less US Canada ones, we talked about Javier Malay, who was really ramping up to do well in the Argentinian election, the federal election, this crazy or crazed libertarian candidate that really had a shot at winning the election. So it looks like he has kind of lost steam a little bit, and he's not positioned too well. I've been trying to kind of figure out, I haven't heard much about him in a while. What are the polls showing? It looks like he's holding about a 17.7% position relative to two other competitors who have 21% and 22% respectively. So interesting. He's done far better than any other, libertarian attempt in Argentinian politics, but not quite enough, it looks like, to win the election yet. That may change. I don't know if they do debates down there. I don't know if, any one of these candidates is going to pull a Howard Dean, do a Dean scream or something silly like that. But it doesn't look like Javier Malay has the momentum right now to win the presidency, which is going to be up in about 2 months or so. No libertarian this time, I guess. But who knows? Maybe next time. Maybe they need 300% inflation for people to realize that the state should not be issuing its own currency down there, unfortunately. But yeah, with that note, chat's a bit quiet. I understand my audio is a little off today, but I appreciate you tuning in regardless. I'm always trying to fix the tech stuff with the show. There's always a new issue. But most of the stuff you can listen to via audio or streaming of your choice. And regardless, I appreciate you tuning in either way. I appreciate you guys watching my shorts. If you are watching this show and you want to talk shop with me on one of these stories in the next week, send me a message and we'll try and get you on the show as well. I haven't done a solo one in a while where I've just rattled on for 40 minutes uninterrupted. But it's nice every now and then. I feel I get a bit deeper. I think one of the challenges sometimes when you have people on these shows is that you don't want to be the only one talking, even though you can go on forever. And you want to let people, get a word in edgewise. But it also means that when you let other people speak on the live shows, that you sometimes lose your train of thought because you're trying to pay attention to what they're saying and try and bounce off the conversation. And I think sometimes, I like that format, and we'll do that, and we'll do more of a roundtable, maybe even get more than, one other guest on. But sometimes I like to rattle off and cover some things that are a little bit hard to get through with multiple guests at the same time. But yeah, appreciate you listening. Intelligent version of Andre Zick. I appreciate that. I am envious of his ability to do magic. I can't quite pull off magic except with the visual effects. I can put on a wig and pretend I'm a woman in my last short. If you haven't seen that, go check that out. But yeah, appreciate you guys tuning in. Hope you'll learn some stuff about what's going on in Niger, Bill Ackman's bet against yields, Microstrategy's crazy leverage Bitcoin strategy. There's always something interesting in the news, and it's always nice to report that to you guys in one way or another. If you ever have any story suggestions for me, something that I haven't covered and you'd like me to cover in the future, send it my way. We have a Discord, or you can leave it in the comments section. Message me anytime on any of my socials, preferably a day before I go live on Fridays. And yeah, we'll talk about it and go from there. Thanks so much for tuning in. Take care. Have an awesome weekend, and I'll catch you next Friday.